What's up, roofing contractors? Michael Mignoni here. In this video, I'm going to share with you a recorded Zoom call that I just finished with a current client of ours. And we were catching up on some stuff regarding his account, and he's telling me about all the deals he closed. But to start off the conversation, we just kind of went off on a tangent about insurance restoration. And this guy knows what he's talking about when it comes to insurance restoration, dealing with insurance adjusters, how to get not only his clients what they deserve, but also how to keep and how to win the jobs and actually get over the finish line with those clients, even though the insurance adjusters are trying some pretty shady things, pretty scummy things to get the homeowners to choose cheaper contractors to do their roofs. And we go pretty deep on it. This guy shares everything that he can, tricks and verbiage and ways of dealing with insurance adjusters. And he knows because he's a licensed insurance adjuster himself. So I'm going to jump over to that Zoom call in a moment. But before I do, I want to invite you to subscribe to my channel if you haven't already. Do it right now. I upload content like this all the time. I'm always trying to upload things that can help you make your business better, whether you work with me or not. It's totally free to watch these videos and get this information. So subscribe right now. You'll be the first to know when new content is posted. You'll never miss anything. You can even ring the bell down there so that you're alerted on YouTube when stuff is uploaded. Otherwise, we're going to jump over to the video right now. So let's do it. Hey, dude.
Good morning.
Morning.
Sorry, I was getting off the line with an adjuster.
Oh, no worries, dude.
That is not always easy.
I bet. Was it like an argument of sorts?
Yeah, it was just a completely negligent, drop the ball by the insurance company situation where we sent in a supplement on a roof that was approved 8 months ago for hail. Damage down in Florida. We met them obviously after the hurricane, but he fired the old roofer that was helped him through the hail claim because the guy wasn't producing his roof in time and ended up getting fired. And long story short, this just goes to show you how much differently the insurance companies will treat a out of disaster situation claim versus like a hurricane disaster claim. The roof report that was approved in June, was for $16,300. Our updated price list and Xactimate estimate for that exact roof today is $19,000 something dollars. So that's the final invoice that we submitted because of a previously approved report. And I sent that on December 5th. Finally getting a response back from the adjuster today saying that the supplement was denied because they found two random roofers in their roof marketplace, they call it, preferred contractors, one that could do the roof for $10,000 and another that could do it for $14,000. So they're going to just approve the guy that can do it for $14,000. And that's all they'll approve of our supplement. But the problem was that adjuster didn't pay much attention to the fact that there's two open claims for this client, one for the main roof that was already previously approved for $16,000. So he just tried to only approve $14,000, and that's a big no-no. They've already approved it in the past, and I had to really just give him a quick gut check saying, hey, well, you need to relook at this. You don't need to tell that to the homeowner. You could actually get in trouble for trying to do unscrupulous business because of how you're trying to handle, however you're trying to handle whatever claim you think we're talking about. That's unscrupulous of handling and pricing a claim. Xactimate and other softwares are used for a reason. Just going and picking two completely random contractors in the state of Florida to provide you an estimate over the phone, and they're obviously paying you, or over the internet, they're paying you for your services, right? At some predetermined cost that you have agreed to give them estimates for,
right? And
it's actually criminal. It's a genius way of fighting back, I guess, as they would call it, but it's really unscrupulous.
That's crazy. Well, it's good that you know what to say to make that clear to them.
Well, it's just upsetting that, it just shows you how differently they handles a disaster situation versus a non-disaster claim. Like that non-disaster claim was written up fairly 6 months ago before, disaster price increases. Like when the hurricanes hit, all the materials go, they're not even a guaranteed price. It goes up daily based on the time of purchase. So the fact that they were trying to operate that way and they just kind of got caught in that situation it just proves a lot of our suspicions right, as a contractor that deals with them every day. And
well, there are probably a lot of contractors that are relatively new to the insurance, world that wouldn't have even known how to push back on that.
Nope, they wouldn't have known how to push back on that. And sorry, I'm in the middle of remodeling.
It's cool, dude.
Still, yeah, they wouldn't know how to push back on that, and like they would eventually settle for that price, and then they would go and do the job and realize, holy cow, I just did this entire job and we only made $1,000. Right. I mean, roofs right now down there, you're spending $40 a bundle, so there's $120 per square, not including tax, on just the shingles, let alone everything else that you got to do and pay for. So it's just really shocking to see what they try to get away with sometimes. And yeah, unfortunately for the new people running a business, they would probably settle for that 14,000, just because they don't really either know how to argue against it or overcome it and get paid quicker, because they're trying to do more business. And me as a small business owner, from our first couple of years of working together, and so only a small business owner, for me, it was how much a business could I afford to do at one time, because I never went out and got loans or anything. And sometimes having to wait 30, 60 days for supplements to be reviewed or approved and get paid in full for a job really hurts what you can do in a year.
Yeah. And usually the insurance jobs are better margins, but I guess the insurance companies are really doing everything they can.
Yep. They're pushing back really hard right now. And that is, there's it's almost like they're a union. When one starts doing something, the others start following suit. And all it is a process of deterrences. One, it's to show the homeowners and clients, our mutual clients, that they do have access to someone that can do their roof for $10,000 or $14,000 if they would like to use them. And that's the approach that they're going. You don't have to use these guys you've already hired. You can use our guys. And how long you have to wait for those people. I mean, there's a catch-22 somewhere. The reason those insurance companies or those roofing companies have agreed to that low of pricing with the insurance companies is high volume.
Right.
They want the insurance companies to provide them the leads. They replace the roofs, and they make more money from doing way more jobs than they would, just having sales guys and boots on the ground.
How are they getting in touch with the insurance companies to let them know that they'll be those low-priced guys?
It is I have the contacts. I have the ability to become a roofer in the roofing marketplace.
Oh, you mean this is a real thing? You can say, I want to be a contractor in the roofing marketplace for insurance adjuster. It's like a credential.
There's companies out there that you pay every year to just review your credentials and make sure you are up to date with your business license, insurance, and you're a legitimate company.
And then just by doing that, insurance adjusters will reach out to you on occasion and say, give me an estimate for blah, blah, blah.
That's how you get access into those networks. So you usually have to contact them, apply, and then they put you through a credentialing center like Profile Gorilla or, ERC, some of the bigger property management credential verification companies, things like that. But that's how you get in. So if you have a reputable company, you can get in, but then you look at the pricing that you're having to offer, to really, I mean, make an unfair profit margin on a job just because of the idea that the insurance company is going to give you a lot of them. I haven't lost one job to it yet. And to show you how drastic of a difference there is, my estimate on a tile roof the other day was $95,000. This contractor's bid was $55,000 for a tile roof, concrete tile roof. And he said his lead time was 2 weeks. That's a lie, because if I ordered tile today, I couldn't get it for at least 6 months. That's at least. And there ain't no way some mom and pop company is going to be able to get a higher material demand and like a special relationship if he's doing way less volume than someone who's like us that's doing 20 plus million, 30 million a year.
So what's the angle there? They're just lying?
It's a huge lie. The fact that he put, I saved it, it's in my email, but the fact that he has 2 weeks on his $55,000 tile estimate for a 60 square roof. Okay. That's less than $1,000 a square. Nobody in their right mind is going to do that roof for less than $1,000 a square. Just not even close to possible.
So just hypothetically, had they gotten the job, what would have happened? What would they have done?
They would have came up with some excuse to why it is going to be delayed, material availability. It's a fine print somewhere in there that, they can only deliver based on material availability. So if they say 2 weeks and then they put the material order in and it comes back 6 months, it's not our fault.
But even if they got the materials, what about the pricing? I mean, are their margins low, or are they like, would they be losing money on that?
They would be doing a $40,000 job after overhead, making $4,000 or $5,000.
Okay.
And then you got to warrant it for however long. And then you're also protecting a $500,000 to $1 million house for $4,000 profit. No, that's nothing. That's not enough. It's not even close to a fair profit margin, which insurance companies are required to pay. And it's shocking to see that that's what they're turning to is, well, hey, these are the people that can do it. And they tag you in the email, they tag the owner, and, they're trying to make you look bad, like you're price gouging, when really, if you really understood the whole situation, all they're trying to do is save their money. Because if they save $30,000 on that roof, and there's 1 million tile roofs that year that get approved or replaced from that insurance company across the country, that's like, I mean, I'm not the best at math here, but that's like $30 billion in savings.
Man, that's crazy.
It's insane. So it's just crooked. And
so you were saying the insurance adjuster, when you said tags you and the homeowner, like they'll send an email out with both of you in CC, and they'll be like, hey, Mr. Homeowner, Robert from XYZ company is proposing to do your roof for $96,000, but I found someone that could do it for $54,000. And then they just put you on the spot like that?
Yes. I have the emails to prove it from multiple insurance companies.
And so what will you do in that? Like when you receive that email, you wake up in the morning, you're like, what an a-hole that adjuster is. And then you reply all to the email. And what do you say?
I say, well, one, we use the same standard pricing and scope software that 99% of insurance companies used or have used in the past to eliminate this problem, which is differences in scope of price and price and scope of work, to where insurance companies and contractors can find common ground based on the same line items, the same zip code, and hey, that's a fair value price. Let's get the job done. So basically just summarize that and say, hey, this is based on Xactimate pricing, and I know you guys have used it in the past. This isn't my first job with 90% of those insurance companies. And, how you're trying to handle it is not technically a fair way of computing this claim. Of course, there's going to be low ballers out there, and there's going to be, your corporate companies that charge way more because their overhead's way more. And, that's a lot of what differentiates pricing, because let's face it, we all pay right around the same amount of materials. Nobody's got a monopoly on materials. I don't care how much business that you do. It's not a substantial one. And you're choosing the contractors of your choice to provide information to the homeowners, not who they've chosen to help compute a fair value price of this job. And you are supposed to be providing a actual adjuster to assess fair value price, not some mom and pop roofing company who's just trying to make ends meet. They've been in business since 1973. Okay, but they maybe do $500,000 a year.
And the adjuster is supposed to be using Xactimate as well, right?
They're supposed to be using some form of fair pricing and scope of work software, or a means to do it, which in a lot of large losses, if an adjuster says, hey, I don't want to use Xactimate, I want you to provide me a list of all of your materials. This is called, this is why I know they have, and if you read laws, there's not really a finite written term, but usually between 30 and 40% is what you're owed as a contractor in profit margins.
Okay.
To be a fair project. So some adjusters on large losses will ask you to provide all of your material cost, break it down. This is what you're spending on materials. This is how much your labor is. Nobody can tell you how much you pay your labor. And that's a big difference in quality. If I'm paying somebody $10 a square to install a hard roof, or $100 a square to install a hard roof, and he's got to come back and fix any problems, the guy getting paid $100 for that square of roofing is going to take a lot better care of that job than someone who's $10 and just trying to make ends meet.
So you're able to respond to that email so that the homeowner can read something, and you're able to write it in a way that the homeowner reads it. And is it the homeowner that responds next sometimes and says, you know what, Mr. Adjuster, I really trust this guy, Robert. I want him to do my roof? Or is it the adjuster that says, all right, I'll back off trying to lowball you with this other guy. Let's just go with you. Like, how does that work?
Overall, at this point, I have gotten nothing but great reactions from the homeowners. They're like, what is that? That is so that's so scummy. Look at how much of a difference it is. And ours is itemized and priced out. Theirs just has a summary of itemized quantities and list of each quantities, and then they just give you a lump sum price. And it really puts a bad taste in our clients' mouths because of what they expect from us when they see that, oh, wow, my insurance company just chose some random company that I've never heard of. We have no idea who that is. And they're probably in cahoots with the insurance company. Most people aren't stupid. They understand by now that insurance companies only care about their bottom line, not how much they help you on your claim when you need it, that you pay premiums for every year. But, there's different departments. You got your sales departments, which is your agents. They're all smiles. They're great at sales. They're going to tell you what you need to hear. And they're going to sell you on what is covered in your policies. But the claim department, their job is to do nothing but limit how much they pay out in your claims. And it's
right. And when it's not you paying for the new roof and it's your insurance company paying for it, your best bet as a homeowner is to get as much money as you can to put toward the project, which ultimately is going to determine the quality of the project, the protectiveness of the roof.
Yep.
And I guess the homeowner kind of connects
the biggest thing
dots.
For me is fair. If a company is getting paid a fair value price and they're a great company and they are a great company for obviously doing a good job over a long period of time, that's what should be paid, is a fair value price for the replacement cost of what was damaged, to bring the homeowners back to whole before the storm happened. Right. The insurance, the homeowners should only have to pay their deductible portion of that claim in most full coverage policies. I'm not speaking ACV policies, just most RCV policies. That deductible is a portion of every item that was damaged or lost on that claim, right? So if you have to spend $1,000, would you want to take it to the cheapest mechanic that you don't know is going to do a good job and has a 1-day warranty or a taillight warranty? Or do you want to spend that $1,000 deductible and take it to a company that is backed by, years of service, warranty, reputation, and they might charge a little bit more, but it's still within that fair value price range. Your deductible
you could,
is what you have to pay. You should want that to go towards something of the best value, not the lowest value.
Yeah, a really good line to put in these emails would be something like, Mr. Homeowner, your deductible is $1,000 or $2,500, whatever it is. You're going to be paying this whether you go with the $50,000 guy or the $90,000 guy. And the fact that, and so here's my question to you. Do you want your $2,500 to go twice as far? If so, I'm your guy, because we're not just simply charging more money and then going out to dinner. We're getting better labor, more skilled labor, because we pay them better than everyone else. We can attract the more skilled, more qualified, more experienced labor, and that makes a huge difference. And whatever else you can say. So that's probably
about
really
$1,000 of protection. If that $1,000 is going with a company that's got $10+ million in bond and insurance coverage versus someone who's got the standard 500 and $1 million aggregate. I mean, shoot, that's a no-brainer for me. Gosh, if somebody dies on my property, they have insurance, but that's only a limit of up to $1 million. A lot of things can happen above that. I mean, especially on bigger houses and jobs. I mean, if you have a torrential downpour in Florida on $1 million house and you're not prepared because you aren't, well structured or being paid good enough to, hey, take your time and be prepared for the pop-up storms. You could flood out $1 million house and boom, the 50/50 law kicks in, and now you're really screwed. You're rebuilding that entire house.
Yeah, that's crazy.
So, and think about if I put on a roof that is warranted for 10 years versus somebody that's only warranted it for 2 years. You're getting an extra 8 years of protection, because the contractor's warranty will always kick first, then it goes to manufacturing warranty. And then, that's just, it's a no-brainer for me and for all of our clients who it makes sense for. And it doesn't make sense for everybody because everybody sees money. A lot of the time you get in contact with them, they already have their insurance reports and they want that $10,000 company. Those aren't the people we want to help.
They want the $10,000 company because they think they're going to be able to keep the rest of the stuff that they're getting paid from the insurance company.
Yeah. And insurance companies are learning that if they withhold less depreciation, those homeowners more than likely will go out and do that themselves. They will be their own general contractors. Like a large loss I have in Florida, guy got it's approved for $125,000, roof and interior stuff, right? And they didn't depreciate anything. They just said, we're subtracting out your deductible, which was like $10,000. And he was sent a $115,000 check that had his name on it and the mortgage company's name on it. He got all of his estimates from the mortgage company. He got all of his estimates from the contractors, provided them to his mortgage company of the contractors he was going to use. Boom, they endorsed the check. And I almost lost that job to some of the low bidders going around giving retail cash prices because that's how they are successful. And,
wait, I don't understand something. I thought for insurance restoration stuff, the insurance company gave half of the money up front, and then they gave the second half. They released the second half of the claim amount.
Most of the time, yes. They do. Most of the time it's called withholding depreciation. And then once you get the job done and you provide proof that you've paid him your deductible portion and what you've already been paid.
What you're saying is sometimes the insurance company says, we're going to approve it for less money, but give the lump sum up front.
On larger losses, what I have seen so far is that they sometimes, not all the time, because it's stupid for them to do it that way. All they're doing is really hoping that it saves them money giving a larger lump sum payment to the to the homeowner, and then them get their home fixed, and like let the homeowner try to
lowball it themselves.
Yeah, lowball themselves so they can keep the leftover. I mean, there's nothing wrong with that, because they have to play GC and manage all of that themselves and get it done.
Well, there's nothing wrong with that. There's nothing wrong with that if you stop right there. But long term, from the insurance company's standpoint, it seems like a really short-sighted thing to do, because if they do give $100,000, but it really would have cost $180,000 to properly install a roof that protects the home, what the insurance company is really doing is shooting themselves in the foot. They're saying, go spend half the amount of money you really should to get a roof, get it done wrong by some crappy company, leaking, and then it's going to ruin your house, which we're covering anyway.
But hold on, they are not covering shoddy installation and installation error. They will cover the water damage from the intrusion of it, but they will not pay for that to be redone. So it's a ploy. They don't care about, they will insure just about anything, because they can always deny your claim based on what is written in fine print in that policy, right? So they don't care who the money's going toward. They don't care if it's quality, low quality, whatever. They care about their bottom line. How much profit are they going to have at the end of the year? And that's by how many claims they either lowball, deny, or delay. And delaying is, the longer they take in a claim process, the more premiums they're getting paid, the more money they have to pay claims. But what they're going for is they're giving a lump sum that's going to make the homeowner feel like, wow, it's a lot of money. I can get all of this done and, find the cheaper guys and keep what's left over. Because guess what? If they would have approved $125,000 and then withheld 50 and, made sure that everything gets done, then they probably are going to be looking at supplements upwards to $150,000, $180,000, $200,000, because, they have forced the hand to the homeowner to get it done, and get it done by obviously people who know what they're doing.
And the homeowner doesn't know that they have the right to file for supplementation. They think that lump sum is the lump sum, but then when they hire their roof, the roofer who's lowballing it to come out and do the roof, and the roofer says, well, we need, we need more money to, replace the decking, which is rotted. The homeowner says, well, I'm going to take this out of the initial $100,000 that I was given. I get to keep a little bit less, but I'm basically supplementing it myself at this point. Whereas if you guys got the job and they withheld depreciation or whatever you call it, you would say, all right, we're going to tell the insurance company that, $100,000 was good in the context of not knowing that the decking was going to need to be replaced, but there's actually $30,000 worth of decking. I don't know if that's a good number or not, whatever, that we need to file for supplementation for. So we need to get them to pay us an additional $30,000 for that. Is that accurate?
Yeah, but as a contractor, you always have to be prepared for pushback and denial of supplements, depending on what that policy states, because they don't have to necessarily replace rotten decking if it takes a long time for the rot to be, occur. Obviously, it does. It doesn't rot overnight, which a storm is an accidental loss, and that's things that they will pay for. But arguments from contractors can be for like code upgrades and things like that, or code coverage. I have to replace that to bring it up to code. So that's where we usually get it approved. But supplements are something that the homeowners can do themselves too. If they were written,
if they know that they even are a thing and know how to do them.
Right. And it usually all gets down to price, and the homeowners end up making their choice based on price, thinking, well, this is all the insurance company has approved and given me, thinking it's final. They don't
exactly. That's what I'm saying. They think that money they got is what they got.
All they got to do is say, hey, well, this is the company I chose. They're $2,000 more than the other one, who was about $1,000 less than what you approved. This one's $1,000 more. I felt more comfortable with them. I'm using them. As soon as they do that work, and I've chosen, as the homeowner, I've chosen them to do that work, I have incurred that cost. Knowing that, like, if that's what they're providing as a supplement, as long as the contractor never backs down a number, and at the worst of it, requires that the homeowner pay it, that homeowner will get reimbursed.
Mm-hmm.
They push back before you get paid. Just one, it delays. Usually you'll end up settling as a contractor to hurry up and just be done with it, you know?
Mm-hmm.
So it's like a constant game, man. And
right. Like the insurance companies are delaying things to put pressure on you with cash flow so that you agree to less money. It's pretty nasty.
Cash flow, homeowners on your butt about getting it done faster, you know. And when you talk about large supplements and larger losses, that's a huge risk for a contractor trying. And you got to think about what good contractors deal with. Man, you're riding that fine line balance of keeping your homeowner happy that's hired you to do a job and not getting screwed by providing those quality services, doing what's right, bringing the house back to a new state with new products, and like delivering an acceptable project and getting paid for it.
Mm-hmm.
For what you want to get and what you would usually charge anybody else to do that job.
Yeah.
Insurance jobs usually do pay more than a cash job, because a cash job I could complete and get paid in one day. An insurance job, there's so much red tape. There is that game of back and forth with the adjuster,
mm-hmm.
that, you know, there's so much more admin work on a restoration job than a cash project.
Yeah.
And, you know, that's another reason for justification. But to kind of circle that all back in, that's why Xactimate is used. That's why it was created. That way you put in the same scope from insurance company, same scope from contractor, and it should be the exact same price.
Yeah.
So
with material costs being expensive to begin with, and with them increasing in price probably from inflation and supply chain things and whatever, the insurance companies are like trying to evade reality and say, I almost want to shut my eyes to the true cost of these materials and just look for someone who's going to just lowball it, and then I can put the contractor on the spot and see how they react to it.
They're trying to get away from what they're showing is they're trying to get away from Xactimate, because Xactimate is really costing them more than they want to spend.
Mm-hmm.
When you have to pay a contractor out a certain amount for how many boxes of nails he has to order for your job, it does add up to be more than someone who's including everything and then giving you a lump sum low price.
Yeah.
That's more like a cash deal. And a lot of times those roofing marketplace providers, they do get paid directly from the insurance company. The homeowner does not see the money that gets paid to the contractor. The only thing that they have to do is pay their deductible portion of the claim. So
wow.
It's showing where they're shifting to, and it's getting more frustrating.
It's showing where they're trying to shift to, but a contractor who knows how this game works can, with the proper pushback, can still be successful.
Yeah, you just your processes are going to be delayed. They're delaying it. I mean, if you look at the average amount of claims down there right now, people just started getting insurance reports from a storm that happened almost exactly 2 months ago.
Yeah, that's a long time to...
almost 3 months ago now. So September 29th.
Yep.
27th. And they have up to 90 days from the time of their inspection to give a report. Think of how bad that is. 90 days. Because of how bad the storm was, that big of an emergency, like somewhat justifiable from the amount of people that need help. But adjusters were in and out. And like, I have family that were cat adjusters. They go work for a bunch of insurance companies. They were only there for 3-4 weeks. Then they were sent home. That means all the desk adjusters had the information like the first month.
Yeah.
And, from that time after the adjuster gets on site, they have 90 days to issue their coverage and report. And that's just bad, because a lot of people are going to end up losing their houses. They have mold.
Right. It's just, and they're delaying it for probably a multitude of reasons. I mean, they're hoping people just do it on their own without having to deal with them. And
it's, well, one, I think it's also they have a lot of subcontractor field adjusters, but they don't have enough people in-house to make the decisions quick enough. And nobody wants to approve more than they're supposed to, because they'll get fired. That's how they get fired in adjusting. And in-house adjusters, you approve more than you're supposed to, or we want you to, you get fired.
Yeah.
Their fiduciary duty is the insurance company.
Right.
That's it. They don't care about the homeowner at all.
Right.
What is the least I have to pay out? That's obvious. I mean, public adjusters, attorneys, they wouldn't prey on the opportunities that they prey on for no reason. You know, there are tons of people that get lowballed and claims mishandled because either A, people are unscrupulous, or they're just bad at their jobs.
Wow.
You know, there's a moral difference between those two. So,
I know that the insurance company doesn't, you know, they want to do what's best for them, but that leads me to believe that there's got to be like a threshold where if something is not at all good for the homeowner, it can't be good for the insurance company. Like, it's not good for a business to kill all of its customers and to destroy all of their customers. So there's got to be some sort of threshold there. Like, all right, they're trying to get away with a couple things here and there, but at the end of the day, they must want to do something that's good for the homeowner, or they're not going to have any other homeowners, because they're going to take their business elsewhere to insurance companies that actually do care about them and actually help them in times of need and stuff like that. So there's got to be a little bit of a balancing act there. And
there is, for sure. I mean, obviously the insurance companies end up making reasonable decisions when you've pushed enough buttons or been, you know, the squeaky wheel for long enough to get the oil.
Yeah.
You know, they obviously have to do what the policy explains. And like, the fine line that we have to be careful of is when we're trying to make sure they do the right thing from a contractor standpoint. You know, me, I guess I'm a little different because I legally can talk policy. I mean, I have an insurance adjuster's license, so I don't know why I'm not allowed to talk policy, and I will tell them that. But you do have to be very careful on how you argue with adjusters, because you can't argue policy. You have to argue what a contractor can argue, just with the knowledge of the policies and the things that you're dealing with, to your benefit. The processes that they're putting in place are obvious that all it's going to do is delay the process, which they'll collect more premiums when they're, you know, like I said, these 90-day claim reports.
Like a game of chicken.
Yeah. Well, oh, I'm about to have to pay out millions of dollars in claims. Well, let's the way that our business works is we get paid once a month from everybody, no matter what, right? So if we draw out one claim 3 months, that just made that claim's impact way less impactful on our bottom line.
They're just buying time.
They're buying time. The more time they buy, the more premiums they collect to have to be able to pay out all these claims. And, you know, in the way that you should be collecting premiums to pay for all the claims that you have to cover. If you're not, like all these companies pulling out of Florida,
if you're not, you haven't assessed the risk properly on the front end and charged a high enough premium to begin with.
Yes, you have made bad fiduciary decisions, and here's where them pulling out, those companies that are pulling out of coverage in Florida, you obviously were charging premiums to cover your policy limits for worst case scenarios, right? And on a law of numbers that you've ran as risk management, like, you should never, as an insurance company, be paying out more than the premiums you're collecting, because not every one of your claims or customers is going to be filing a claim. Very few of your customers in the large scope of things is filing claims with you. And it's really unfair that they're able to pull out after year after year after year, billions of dollars of profits. You know, that's after all claims are paid, the profits. that they can really do that. I mean,
Yeah.
you look at some of the lawsuits going on, like against UPC, and I don't know the full details, but I know from claims that I still have not closed out supplements with from 2 years ago with UPC because they just quit responding. I can't do nothing if they don't respond.
Right.
I can sue the homeowner, and then they can then sue the insurance company for not.
But that's not a good look.
No. So what ended up happening is we wrote it up as sunk cost. I had to and it was the situation you asked about earlier. I had to redeck half a house, $8,000 in added plywood and labor costs for that job. And it was a big home.
Right, because you're not going to leave the homeowner up Schitt's Creek because right.
We can't. Not in Florida, where you have to pass inspections, a dry-in inspection, which is halfway done. That's the waterproof membrane, and then the final. No, you will not pass a dry-in inspection with roofing over rotten crap.
Right.
So that's where they do have to pay for it if it then becomes a code item, and it has to be done for code purposes. And that was the whole argument that we had was, well, you are the insurance company. You insured a roof that had 2 layers on it. It's all vaulted ceilings, so nobody can get in the attic and tell you how much wood rot's going to need to be replaced. This is directly going to have to be done as it's ripped off and discovered.
Right.
Which is like why supplementing is even a thing. I mean, you really can't. Nobody has X-ray vision.
Right.
You can't see some of those things sometimes. So, but no, that was completely ignored. Never heard back from them again after I asked for them to release the depreciation. They released the depreciation, but they never responded to my supplement request for having to do all that.
Wow.
And it's just a lot of unscrupulous things I've seen over the last couple of years, but they are starting to all create processes to delay, deny, and lowball. Delay for how long it takes for them to close out a claim. Deny, they're going to deny everything they can or they think they can to save them money. And then they are going to lowball because they obviously are implementing a system of where they are collecting bids from trade specific contractors that are in their network to combat the chosen contractor by the homeowner. And they also tell it in the email, you have access to use this person. All you have to do is literally pull out your phone. They have like one of those little snaps, those little digi boxes that you can
those QR codes.
Camera. Yeah, QR codes, and it'll get you in contact with them right away.
It's crazy.
Absolutely insane. But you know, it's one thing for one company to do it, but I have 4 or 5 different major insurance companies starting to do the same thing. And it's only going to get worse.
Yeah.
More storms that we have that back to back like that, like 2 hurricanes right after another. Like, I feel for the insurance company in a way, but then again, I don't. I feel more for the homeowner who's paying those premiums in good years and then having trouble getting paid when it's a bad year and they have to file.
Yeah.
So yeah, there's a little bit of information.
Well, that was like a crash course in advanced methods of dealing with these sorts of things. That was cool.
I feel like that's how we start off every meeting, me and you.
Well, you have a lot of stuff. You have a lot of knowledge about this. And I like learning about it because when I'm listening to you say things, I get ideas for marketing. And so I have a lot, and actually it relates to a video I just put out recently about a huge mistake that contractors make when they're creating advertising for themselves, or whether they're having, or that marketers make when trying to help roofers. And that is, they've got these bits of gold, like what you shared, like some of these strategies and things. They've got this amazing information, but the mistake they make is that they think it's good for the ad, but really it's good for closing the sale.
Yeah.
And like, if you tried to put some of the stuff you explained in an advertisement on Facebook, for instance, it would be too complex for homeowners to really digest and appreciate. But it's something where once you meet them in person, you can start educating them about this stuff so that they won't even think about going with the guy that's half the price that you are.
Yeah.
And also you can use it in those instances when you're kind of put on the spot by the insurance adjuster in an email thread and stuff like that to get them over the finish line with you and make sure that you're the one that they actually have do their project. So, but there are other things you might be able to do, with that information you just shared with me. Like you could put that in a video and then once it's in a video, you can have it as a resource to share with any of the homeowners that are thinking about having you help them with getting their roof paid for by the insurance company. You can use it in a million different ways, and we can talk about that. You can put it in email content, like for email marketing, drip type stuff. So I like learning about it because it gives me ideas for advertising and marketing and how to just get you over the finish line with more and more clients.